Understanding Bitcoin's market dynamics. As Bitcoin's scarcity increases post-halving, key metrics signal a strong upward momentum and potential for significant price appreciation. November 4, 2024. 1. Overview of the chart's key components. The chart overlays Bitcoin's historical price, black line, with a suite of on-chain and market-based indicators that have been instrumental in predicting Bitcoin's cyclical highs and lows. It offers a visual representation of the interplay between miner economics, long-term market trends, and supply-demand dynamics driven by Bitcoin's stock-to-income model. The three core metrics. Adjusted pool multiple bottom oscillator. S2I price model, yellow line with multiples. Monthly issuance, red areas. We'll explore each of these in detail, highlighting their significance, how they work, and what they tell us about Bitcoin's future price movements. 2. Adjusted pool multiple assessing miner pressure. What is the adjusted pool multiple? The adjusted pool multiple is an advanced version of the traditional pool multiple, designed to evaluate the profitability and economic behavior of Bitcoin miners. It calculates the ratio of daily miner revenue, in USD, to the 365-day moving average of miner revenue, adjusted for the current supply dynamics. Purpose: to identify periods when miners are under severe financial pressure, undervalued, or when they are reaping significant profits, potential market tops. Key levels. Red zone, overvaluation. When the oscillator rises into this zone, it signals that miners are making substantial profits and may increase selling pressure. This often coincides with market tops or overbought conditions. Blue zone, undervaluation. When the oscillator dips into this area, it suggests that miner revenues are relatively low, signaling potential undervaluation and accumulation opportunities. Current interpretation. Recent trends. The oscillator has rebounded from the blue undervaluation zone and is heading toward the upper region. Historically, this upward movement precedes major bullish price rallies as miner selling pressure diminishes and investor confidence grows. Implications. As the pool multiple trends upward, it reinforces the notion that Bitcoin is transitioning from an accumulation phase to a phase of strong price appreciation. However, we must be cautious if it approaches the red zone, as this could indicate the market is overheating. 3. The S2I price model, Bitcoin's fair value post-halving. What is the S2I price model? The S2I stock-to-income price model is a unique approach that projects Bitcoin's optimal or fair price based on its scarcity and post-halving dynamics. It adjusts to Bitcoin's 4-year halving cycle, which cuts the supply issuance rate in half, effectively increasing Bitcoin's scarcity and driving long-term price appreciation. The yellow line represents the S2I price, which is a calculated fair value based on Bitcoin's stock-to-income ratio. Multiples, bands surrounding the S2I line signify overvaluation and undervaluation zones, helping to contextualize where Bitcoin's price stands in relation to this model. Current status and interpretation. Flatlining at $320,000, the S2I price is currently around $320,000 and has begun to plateau, reflecting the impact of the April 2024 halving. This plateau signals the beginning of a new phase, where Bitcoin's scarcity is fully priced in, and the market begins to eye this value as a long-term target. Price convergence. Historically, Bitcoin's price has a tendency to converge toward the S2I line as bullish momentum builds. The current setup suggests a significant rally may be underway, with Bitcoin aiming to close the gap to this $320,000 target over the next 12 to 18 months. Short-term versus long-term expectations. Short-term, the primary hurdle is the Apple price at around $95,000. Clearing this level could act as a launchpad for a rapid appreciation toward the S2I price. Long-term, if Bitcoin follows historical patterns, it may rally beyond the S2I price, as speculative mania tends to drive the price into overvaluation territory. However, this scenario will heavily depend on macroeconomic factors, investor sentiment, and miner behavior. 4. Monthly issuance, MI, supply pressure from miners. Understanding monthly issuance. Monthly issuance, MI, quantifies the amount of new Bitcoin entering circulation through mining rewards. It is crucial because miners are one of the largest sources of Bitcoin selling pressure. When issuance is high, the market needs significant buying volume to absorb this new supply. Red areas highlight periods when miner revenue and supply issuance exert downward pressure on the market. These areas often coincide with bear market conditions or periods of price consolidation. Lower MI values indicate reduced supply pressure, which is favorable for price appreciation, especially when coupled with strong demand. Current analysis. Reduced supply pressure. The chart shows that MI has been declining, a direct consequence of the recent halving. This reduction in supply issuance means the market is under less pressure to absorb new Bitcoin, creating a more favorable environment for price appreciation. Supportive of bullish trends, with MI in a downward trajectory, there is less selling pressure from miners. This aligns with the bullish outlook presented by the Puel multiple and the S2I price model. 5. Historical context and forward outlook. Historical correlations. Analyzing past market cycles, we observe a consistent pattern. Accumulation phases occur when the pool multiple is in the blue zone, MI is declining, and the S2I price begins to flatten. These periods have provided some of the best buying opportunities in Bitcoin's history. Bullish breakouts. As the pool multiple rises and the price approaches the S2I line, momentum often accelerates, driving price rallies that can exceed expectations. Speculative tops. Once the pool multiple enters the red zone and price overshoots the S2I price, we often witness euphoric market conditions, followed by sharp corrections. Current market setup. Accumulation to appreciation. We are witnessing a transition from accumulation to appreciation, marked by declining MI, a rising pool multiple, and a price aiming to test major resistance levels. Key levels to watch. Short-term resistance, $95,000 a pool price. Long-term target, $320,000 to I price. Potential risks and considerations. Overbought conditions. If the pool multiple reaches the red zone too quickly, it could signal an overheated market and the potential for a sharp correction. Macroeconomic factors, global financial conditions, regulatory developments, and macroeconomic trends will heavily influence Bitcoin's trajectory. Conclusion. The combination of the adjusted pool multiple, S2I price model, and monthly issuance paints a compelling picture of Bitcoin's market dynamics. As we approach the end of 2024, the indicators suggest a strong bullish phase with the potential for significant price appreciation. However, investors should remain cautious and keep an eye on overbought signals and external market conditions. Bitcoin's journey from $95,000 to $320,000 is not guaranteed, but the groundwork for a major rally has been laid. If historical patterns hold, the next few months could see Bitcoin reaching new all-time highs, driven by diminishing supply and increasing demand. Understanding these metrics will be crucial for navigating the coming market moves and making informed investment decisions.